Welcome back to the channel for a morning market update. I'm Crypto Trend Trader, and before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Alright, so if you're new to the channel, welcome. For the first time, make sure you like and subscribe. All the indicators that I use in this video are available for free on TradingView. I can check them out in the comments, or in the description, and get all the specifics on them. I highly recommend that you use TradingView to do your own charting and learn or follow along as you go, as I do basically use the same techniques over and over for all different asset classes. Before we get started here today, I just want to break it down. I'm essentially dividing up the video into multiple parts. So I have already put one out on the traditional markets. This one here is going to be on the DXY, 10-year Treasury, silver, and gold. And then I will finish up with a crypto video later on. So I'm going to try this format out a little bit better and see how people like it. That way, if you're not interested in certain asset classes, you don't have to scan through all of it. And it also cuts down on the overall time of my videos as well. So let me know if you prefer it this way, or if you have any recommendations or requests. I'm glad to take a look at anything you have interested in that we can put up on a chart here. So today it's going to be the DXY, 10-year, silver, and gold. So here we are on the DXY, and I've been talking about this for quite some time here, how this was potentially looking like a bottoming area. Now we do have the daily chart pulled up here, and essentially we have been operating inside this channel when we topped out since April of last year, of 2020. And we have essentially sold down inside this channel for almost an entire year now, as we're in the beginning of February. And now we basically started at the top, came down to the bottom, came back to the top, came down essentially to like the midline, failed to find support at the midline, came back to the bottom, got above the midline, found support, came to the top of the channel, then we came down to the midline again, and then back to the top of the channel. So when this happens here, this is typically what you see before a breakout to the upside, or opposite. If we would have come down here to the bottom, came back to the midline and got rejected, then came back to the bottom, it would look like we were going to break to the downside. Now overall, typically when you're in an uptrend, which you have to pay attention to what time frame you're looking at. So I'm on the daily here. So prior to this downtrend consolidation channel that we're looking at here, we were in an overall uptrend, okay, inside of a massive downtrend. So typically this pattern is going to break to the upside, and it's going to get a measured move equal to the length of the pattern from the bottom to the top of the channel right here. So a break of this channel, assuming it was going to happen right now, from that 91 point would basically take us up to that 95.75 range. So let's turn off our moving averages and take a look at just the channel here and see how this kind of breaks down. Before I do that, I'm going to go to the monthly chart, and I can just kind of demonstrate exactly what I'm talking about. Let's turn off all this. And this is our monthly chart. So we are in an overall downtrend. This is 1986 high. This is a high from 2001. And then we have a high here from 2017. And then we have a low here from 92. And then we have a low here in 2008. Okay, so we have a high, a low, a lower high, a lower low, another lower high. So we're in an overall downtrend. I'm not arguing that, okay? But then now this is what we're paying attention to. Since 2008, this was our low. Then we put in a high. Then we put in a higher low. Then we put in a higher high. Then we put in another higher low. And now here what we're looking at is this the end of this overall trend? Or are we just putting in another higher low and then getting continuation to the upside? And sometimes people get confused, because if you were looking at this short term and you saw this low here, and then you saw a high, and then you saw a higher low, and then you saw a lower high, you might think, oh man, we're going into a downtrend. And technically we are, because we had a low, then we had a high, then we had a lower low, then we ended up getting a lower high rather, then we ended up getting a lower low. But overall, we never took out the low here. So overall, the trend is still up, but we're in a micro downtrend inside the uptrend. So this is our uptrend so far. So the question is now, is this high right here just going to be essentially this right here, and then we get a continuation to the upside? Because all we have to do is just not take out our previous low from the previous high, which we have done, because this was our low right here, and we came down and we did not take it out. So if we continue now, it's not unrealistic to think that we could break through this top right here at 102 and get an overall uptrend. And this is based on technicals. I'm not looking at fundamentals and dollar printing and all that stuff. So Essentially we're looking at still potential continuation of the uptrend, and that this is just a similar consolidation pattern to this. The only difference being that right now it actually looks slightly more bullish, because if we break out now to the upside, we will have not put in a lower low like this, but we will have put in that lower high like this. So we have a high, we have a lower high, we have a high, we have a lower high, we have a low, we have a lower low, we have a low, we have a higher low. So we're actually more bullish right now than we were right here, and look at the continuation that we got after that. So it is not unrealistic to think that we're going to still get a massive move to the upside. So after saying that, let's look at what's going on here. So I'm going to pull those back up again, and now we're looking at that break, and we're looking at that measured move and the potential that it could give us. Now look, this is what we were talking about. This was a key area we were expecting a potential rejection at, just like we got here. We got basically all the way up to that line there, and then we got a very bearish candle came in. We got an attempted pushback up, and then a hard rejection right here. So this is a bearish, extremely bearish candle. Obviously it took out the 1, 2, almost 3 candles in a row before that with one big solid red candle, and then we attempted to push all the way back up and got a very strong rejection wick right here. So we opened right here, we gapped down, opened right here, moved all the way up and got a new high or same high, and then we sold down and lost that whole candle. That is essentially a rejection of price action to the upside. In this case, it's relation to other currencies in the index. After that, shooting star candle, basically rejection. We continually sold off, very violently after that. You'll see we got another one right here, attempted to get continuation, and then sold off again. At that point, we did find support multiple times in a row at the heart line here, and then we came back up to retest the top of the channel. So we're very much paying attention to what happens here, because we could just as easily get denied right here, and then this is today's candle, still has like 13 hours left on it, and essentially we could break out now and get a massive move to the upside, and then come back down and get a retest. We could get massive continuation over the next few days or weeks, even months, or this could get rejected, and then we would just be getting rejected right here and then sell back down, and then essentially we opened right at this line of the top of the channel. This could turn red and get very violent to the downside, at which case we would have to look at this as a rejection. But what we're paying attention to is typically when you come down, when you come to the top of the channel and then you sell back off, but you don't get back to the bottom, you find support at the heart line and then you retest the top again, you have much more strength to break out to the upside. So that's what we're paying attention to. We also have essentially, through this area, when we flipped this slope over blue, we came up from the bottom of the channel all the way up to the top of the channel, but we were exhausted already and we lost that blue slope line and sold off. The bulls were in control and we peaked out right here. We're unable to break back out on the second attempt, and then we sold off. So now here the bears were in control. Here again the bears were in control, and then they got a slight little push again right there, and now here we're back on top. We flipped that slope line over blue, but look where we flipped it over blue at. We flipped it over almost at the top of the channel already, as we're here, we flipped it over at the bottom of the channel. So the amount of strength that we could get in a move is only going to last for so long before we start to get a retracement. So here we got all this strength to go sideways only to make it to the top of the channel and then sell off. Here we've used all this strength, but we've used it from the center, so we have much more potential to actually break out to the upside and get a bullish retracement and measured move of this overall channel. And then once again, you see the same thing here. The Stoch's blue came here, and then we found support basically on the purple. It looked like we were going to sell off. We actually crossed it back down to the downside. The blue crossed under the purple, and then we crossed back to the upside. So essentially that's like a bullish consolidation. We reset the indicator, and now we're getting ready to enter the bullish control zone, turn this red down here and break out to the upside. So we want to look, we're either expecting a powerful rejection right here, symbolizing that the dollar is going to weaken in relation to the other currencies in this index, or what it really looks like is going to happen is that we're going to get this confirmed breakout and we're going to get a very nice measured move, potentially to take out these previous highs right here in the 94 range and come all the way back up to the 96. It's not guaranteed yet. We need to pay close attention, and we do have a couple of resistance lines here as well from our previous triangle that we were inside of. So that's our DXY. This move right here is going to correspond with traditional markets, cryptocurrencies and potentially gold and silver like having violent sell-offs, as essentially money flees all these overinflated assets, or some of them overinflated. It's all subjective, but it moves back into cash, to potentially take profits and look for re-entries into, what would be a continuing uptrend or a consolidation or potential bear market, depression, recession, etc. So let's switch over to the Treasury. This is the 10-year Treasury yield. And once again, on the daily here, I did want to pull up the moving averages. I'm sorry. Let's do that while we got it here as well. Turn off our drawing tools. Look at the moving averages. This is very important. We did get our cross at 8 and 21. Tried to reject it. Could not reject it. We got the parabolic SAR flipped over green here, symbolizing, continuation of a powerful trend. This is the best one we've had yet, with the exception of this previous one, which came up to the purple, which is our 89 moving average. That's going to take us up to 91.50, at which point in time I would expect at least temporary rejection, come back and find support, on the previous moving averages, which would also line up with a breakout, a retest of the breakout support of our channel that we were looking at, and then continuation to the upside. Continuation to the 200 exponential would be $93 and some change, and $94 lines up with our 200 simple moving average, which once again, definite potential targets to the upside, at least for we could easily have an underperforming measure move and then come back down here and sell back off as like another stimulus deal is passed, etc. So here's our treasuries now. So basically we bottomed out back here in August of 2020. Came down to basically like 0.5%, 0.5. And now here we are up at, we started off, at 1.08 today. And now here we have just gapped up to 1.11. Quite a substantial move. It doesn't look like it, and obviously this is still extremely low yield, but if you're coming from 1.7 and you're moving up to 1.11, you're essentially, that's a 3.28% move. That's a big deal, and we're at 1.12 now already. So while these are still extremely low, a gap up symbolizes or coincides with potentially strengthening dollar, and then also a sell-off in assets like traditional markets, etc. So we're very much paying attention to that. Also, you'll notice here that something very important happened on the daily. We got above the 200 exponential moving average, consolidated on top of it, and then got a move up to the 377, got rejected, and we've put in a series of higher lows. And now also what's very important for determining essentially a bull market in an asset, not only do I like to use the 200 exponential moving average, the bright blue, but I use the 200 simple in traditional markets especially. But what you're paying attention to is not only is price action on top of those 200 moving averages, which we are, but what is the slope of those moving averages? And you'll notice here, if we just take a basic drawing tool and we just put a horizontal line right at those moving averages, you'll notice now we are bouncing off that horizontal line and the slope is moving to the upside. Same down here, obviously it's much more clear, but we have hit this and now we're moving to the upside. So now the slope is angled to the upside on both these 200 moving averages, signifying that not only are we on top of price action, but these assets are now in a bull trend. So how long will that bull trend last? Could we just get rejected here a second time and sell off? Of course, anything could happen, but this is typically the best time to take positions in an asset. So in this case, if the 10-year treasury is entering a bull market, after, based on the daily, we have been getting basically rejected since way back here. We lost the slope on these back in 2018, December of 2018, we lost the slope at 3%. So now we have the slope. This was negative because the slope started coming down on all these things. Now here we are with the slope moving back to the upside. So it's very likely that we have bottomed out and that we will be in fact entering a bull market. Now what does that mean? Does it mean we can't come back down here and sell back off and go lower? Not at all. But it means overall that the trend has switched and this is now an uptrend on a daily time frame. So that's very important. Definitely signifies that we are at a potential inflection point in the market. And a lot of times what happens to people is they get so used to a market being bullish or bearish that it's hard for them to see when the market switches. And that's why this is a very easy, very simple, very basic, but very, very effective way of determining is the market switching. And this to me, not only being above the 200 exponential and 200 simple, but also now, both those slopes being to the upside, and the exponential reacts quicker. You see the slope switches over like most of the time faster, but now the simple as well. This looks extremely bullish to me. Everybody is saying, oh, it's just a little pullback, everything's still bullish. Well, this is bullish right now, and traditional markets are starting to look less bullish, like we're going to get an extended pullback, or, dare I say, potential double dip recession. So, very careful here. Definitely a good time to make sure you got those profits locked in on, all your different assets. So when we have the DXY and the 10-year telling us the same thing, that all of a sudden cash is going to strengthen, all of a sudden treasury notes are going to strengthen, that basically signifies to us that there is a very high likelihood that, it's a bubble pop scenario in these markets, and we can expect a very strong retracement. So let's switch over now to silver. Next, I have silver on the daily here, and this chart is extremely busy. So, bear with me here. Obviously everyone was extremely bullish about a potential short squeeze. Exactly what I said happened. We basically pumped up, broke out of that channel, and matter of fact, actually, we got the moving averages up. Let's look at them. So you can see this is a very good example of exactly what I'm talking about. We basically sold off below the moving averages, and then once we got back on top of them, we started looking at silver as being potentially bullish. That was back here, in the $17 range. And from then, you'll see once the slope switched over on the 200 exponential and 200 simple, at $17, we went parabolic. Got all the way up to $30. So that was a 100% move basically in silver in a very short amount of time. Basically once we were on top of the moving averages, once the slope flipped, that was June of 2020, and we doubled the price by August. Now granted, that was, obviously a crazy situation, but that's a 3-month period for a 100% move in, an asset like silver is very powerful. Now, when we got this move back up here again, we essentially came back up and retested that high, and now we've sold off. We've gotten almost a bearish engulfing candle. We'll have to see what happens in the next 8 hours, but we got a massive move up and then lost the entire move. But we did come back down, and we are currently finding support on that previous high. So it is possible we're going to build on top of this high, come down, move up, and then build on top of it, and then get continuation. But I don't think that's what's going to happen here, because I think this is just another one of, it looks to me like a throw over, which if you're not familiar with the term throw over, essentially what you do is, this is, let's take a look at what's going on here. We basically have a massive triangle that was building. We put in a high, lower high, dump, found support right here, and started basing out, put in another lower high, based out, put in another lower high. So we have essentially this triangle here with the green at the bottom and the purple at the top. Once we broke out of that, that's a breakout, technical breakout of the triangle, at which point in time we would expect to get a measured move of, there's a lot of ways you can do a measured move. I like to do conservative, but, essentially we take the point of breakout to the top of the channel at the point of the bottom here. So where we bottomed out in price to the top of the channel, or top of the bottom, however you want to do it, when we break out of this, what should have been a bearish pattern, but when we break out of it, our measure move takes us back up to essentially the all-time high, which is actually, we got an underperforming measure move, came back down, found support outside the channel, and now here we've hit our measured move now. So what we need to pay attention to now is we have formed essentially another triangle. So here's our high, low, high, and we have this flat bottom now. We have this red resistance line, which is the top is here, then a second one, then a third one. We broke out of it, and then we've come back down. Do we find support right here on this technical breakout and then get continuation to the upside? At which point in time, we would take the measure move of the larger triangle here, which is going to be from the bottom green here to the top red, which is going to take us up to that $33 range. Or is this just a throw over? Which now, to explain a throw over, essentially rather than just going to the edge and then price just dumping out of a technical pattern like a descending triangle, a lot of times what will happen is they'll attempt to break the price action out to the upside and then use all the people who FOMO'd in at the last minute, or all the shorts that get squeezed out here. they have to buy, it pumps the price up real high, and then it's unsustainable. So then everybody re-enters their shorts, or everybody sells as they lose this entire candle, and then it sells off violently back down to the downside. And a lot of times what it is it's like a rocket booster. Instead of this being a rocket booster to the upside, it's a rocket booster to the downside. So, walk out to the edge of the cliff, whatever you want to say, throw a rock straight up in the air, and then when it goes up even higher, and then when it comes down even harder. As opposed to just moving to the top and then selling off and finding support, it's unable to break down to the downside. So we'll have to see, does it find support here and get continuation, or does it go bearish and move back down, at which point in time that $22 range is what we're looking at, $22.70. But potentially even, looking at this now as a trading range rather than a triangle, basically a just sideways consolidation, because we have a high, we have essentially the same high, we have a low, we have essentially the same low. So are we just going to oscillate inside of a channel now and just move between $22.50 and $30? We definitely could, and that's like a zigzag, basically like consolidation. Instead of actually like consolidating and selling off to the downside before continuation to the upside, basically just go sideways and oscillate inside the channel, which is very likely. It's definitely a possibility at this time. So now let's turn off our drawing tools and let's look at our moving averages. And, just like I spoke about here, we came down. The best buying opportunity often is the 200 moving averages. So when we sold off initially, sold off again to essentially the same low, hit the 200 moving average. If you took a position off the bottom there at $22, I bought quite a bit down in this area. Bam, we got a nice move back up to 30. Obviously a very nice gain. It's basically like, over 50%? Around 50%. So, great move, obviously. But does this mean that now we can't just go back down here and sell down out of the pattern and come down and test one of these other moving averages? Not at all. Could we come back down here again and retest the bottom of the range? Of course. Could we essentially form a cup, come down here, put in another smaller, circular pattern and form like a handle here, and then get a breakout, and then we have basically the world's biggest cup and handle inside of cup and handle? Definitely a possibility. If you're not familiar with what I'm talking about, look at my silver cup and handle video, basically talking about the most massive cup and handle ever, with price targets measure move up to $90, potential targets of like $200 to $250. But just like I said, exactly what happened. The market cap of silver is massive, and all these attempts of like Wall Street Bets and Reddit and, all these like silver bulls and everything to try to say that we're going to break this out. And if you look at actual like silver and tried to buy some over the weekend, the price was ridiculous, especially in this range when it was at like $30. It was selling for like $40 an ounce for a physical. The premiums are still between $6 and $10 an ounce for just regular bullion. The dealers were sold out. You couldn't even find silver online. If you went on eBay, it was $40 an ounce. If you went to like the physical dealers over the weekend, they were unsure what was going to happen with price. So they were basically like not selling any silver because they don't want to sell it and then have to rebuy it at a higher price. So what they do is just say they're out of everything, except for the stuff with ridiculous premiums like collector stuff. And then they just wait until their dealers open back up, and then they see what the price is going to be. And that's exactly what they did, because all of a sudden all this silver is back in stock, but the premiums are still extremely high. Premiums are $6 on like just regular coins and bullion bars, and they're upwards of like I couldn't find Eagles for anywhere less than $10 premium. Typical premium on Eagles is like $3 to $5. So the premiums right now, and for regular silver, like $2.50, $3, $4, $5. So premiums are basically doubled right now. And, the message on most of these dealers was that they were out of silver or not selling silver because of the massive demand. So we need to pay attention and see what happens right here. But I think the gold chart is going to give us a really good idea what we can expect. Oh, and a lot's happened since since this video started. So yeah, let's take a look at this gold chart because it's getting even more relevant. And again, if you haven't looked at my previous videos, highly recommend it because it's playing out exactly like we said. Matter of fact, we're basically came down to the 200 moving averages, got to move back up. We have a high. We have, basically a low here. We have a lower high. We have a lower low. We have a lower high again. So what do I expect? Another lower low, which would take gold below 1,775. My target is actually down here to the 377 at 1,722, but we could find support anywhere in this range, like 1750. Essentially find like a same low here. But again, gotta watch, because these 200 moving averages, the first time we touch them, we get a massive bounce back up. The next time we touch them, we get a very little bounce back up, and now here we are coming back to touch them again. That's not what you want to see. The more times we test a support, the more likely it is to break. Let's flip over now to what's even more important, because if we look at typically gold and silver will move together, and overall silver has been more bullish than gold. So when gold topped out here, it came down and it's been putting in a series of lower lows. You can see this channel we have drawn, as where silver was finding support essentially at that low, and then just kind of holding. And then when silver just broke out now, both of them broke out of their little channel here previously and then broke back inside. But over the weekend, silver got the measured move breakout of its channel and took it all the way back up to that previous high and slightly above it. That would have corresponded with gold coming up to over $2,000. It did not. Meanwhile, gold just got rejected off that top line. So we basically got that fake out throw over here, sold back down to the heart line of the channel, and then we started, we basically had this triangle forming with the exception of this throw over. So, you can take that into account however you want, but we definitely have a low, a higher low, and then a series of higher lows. And now look, we're potentially breaking down from that triangle. And if we do break down from that triangle, the measure move of this triangle here is going to take us down to 1700. So could we underperform that sell off and just come down to the bottom of the channel and hit like 1720, 1750? Definitely a possibility, but it's looking more and more likely by that bearish candle right there and silver selling off like that. If gold breaks out of this pattern, I would expect at least a heartline test of 1786, 1760, somewhere in this range. I will look at that as potential buying opportunity again, as that would be like a retest of this previous resistance that would essentially act as support again. But it's not unrealistic to think that we're going to get a consolidated downtrend and keep selling off here. And then if we pull back up the prophecy again, that 377, depending when we get there, is going to line up around that 1724 range. And then the last moving average I like to use, this one again on the daily, would be that 528, which would be like, if this played out for a couple more weeks, that would be like a mid-March bottom at the bottom of the channel right here and touching that 528, as it's going to start just kind of going sideways here. And, by that point in time, we could potentially be losing the slope on these 200 moving averages. The 200 exponential is already like almost sideways. The 200 simple is getting less and less to the upside. And the longer we spend underneath this thing, the harder it's going to get dragged down. And this is potentially like gold and silver markets topping out on the daily. So, again, I'm not trying to be overly bearish on this stuff. I'm just looking at the technicals and what they're telling us. So, well, there you have it, guys. Make sure you check out the other videos today. I'm doing this in a 3-part series. We have the traditional markets. We have this video here, and then I'm doing cryptocurrencies as well. Let me know in the comments if you'd like to see the videos broken down like this, or you just prefer one long video. I'm trying to make it more appealing to different people who are interested in different markets. It's just as easy for the people that like it all to just click on all three. So let me know if you have any assets or anything you'd like specifically me to take a look at. If you have any questions about technicals or fundamentals, or you'd like to hear my opinion on stuff as well, let me know in the comments. I do appreciate any likes, subscribe, shares, etc. Make sure you sign up for notifications, as I do put out a lot of these videos time sensitive. So at this point in time, we've got quite a few targets. Obviously indicator oscillators as well. We have talked about quite a bit in these various videos, and maybe I'll take a look at some of the longer time frames and macro in our next video as well. So like, subscribe, share. Crypto Trend Trader. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Be careful, because we could see a big breakdown from this point here on gold and silver, and we could see some serious strengthening on the dollar index and the 10-year treasury. So, Crypto Trend Trader, and I'm out of here.